morning as he always does. Sandeep, great having you. What really stood out, Sandeep, in terms of the numbers yesterday at least, was some of the smaller banks, AU Small Finance, IDFC First, some very strong numbers coming our way. Good time to probably up the bets over there.
Yeah, so I think there's been a dichotomy in financial sector results this time. So some banks, uh, some large banks have reported decent numbers, but other large banks have not. But on the whole, on the mid-tier banks and NBFC side, the results have been largely strong. In fact, IDFC Bank, which we also hold, results actually stood out because of improvement across parameters, be it NIMs, ROA, the kind of growth outlook that's there. And they could be one of the bigger beneficiaries out of this entire FCNRB deposit scheme because they right now have very small NRI deposits and they could actually end up garnering significant amounts which could help them shore up their deposit base. So overall, I think IDFC outlook continues to be quite strong.
Hi, morning. What's your take on HDFC Bank? Things gets coming and there's no end to the news flow coming from the bank.
Yeah, so only thing we can say is that I think the stars of HDFC Bank are bad these days. So nothing seems to be going right. So, but I think that's the scenario that exists today. It's a hugely over-owned stock, and that's the bigger issue. When the stock is so over-owned, and then there's a slew because the results are also not inspiring. But that said, I think at 700, I think it has a strong support technically also. I think which Kunal can also comment on, and I think fundamentally also around that level the stock would come to reasonably cheap levels. So I would think that no large upside triggers right now, but the downside is also limited.
Ask Kunal for that view. Kunal, HDFC Bank.
It doesn't look like that the stock is likely to form any kind of a bottom. This is the third attempt, by the way, for HDFC Bank towards the 720, 730 levels in the last 4 months. I think April is where the stock had tested the 720-ish kind of a mark, bounced back towards 800, came back towards a test towards the 720 levels, then moved towards 830, 840, and now back again potentially to that 720 mark. So this in effect actually could be a breakdown of sorts for HDFC Bank. So technically the 720 is a crucial support, but if it falls below this level, we may see at least another 5% to 7% in the very near term.
Actually, I would be very curious to know, other than mutual funds and of course some of the FII books, who owns HDFC Bank? I mean, out of the retail participants, I think the market has moved way beyond owning HDFC Bank.
And foreign institutional investors have reduced their stake in HDFC Bank. Yeah. Mutual funds have increased it, and there's still the optimistic retail investor, more than 34 lakh investors, which are still owning HDFC Bank because of the kind of pedigree it had. But things are not stopping, right? I mean, it's the news flows continues to come in. And every time...
Like Sandeep said, Sitare Kharab hai. I think that's what's happening with HDFC Bank. But yeah, you were saying?
Yeah, I'm just saying Sitare bhi zameen pe hai.
Yeah.
So that's what. Sandeep, from other companies, the mid-tier IT companies, Coforge numbers, or for that matter, Happiest Mind, have you had a look at the numbers? Because Coforge numbers doesn't look so enthused. The growth is based on the acquisition, but on an organic basis, it's just 1% quarter-on-quarter growth for them. Why should a company like that get a premium P as compared to a flagship company like an TCS or an Infosys?
See, some of these companies, the mid-tier ones, went into a premium to the large cap companies because of the fact that they were growing faster than them and several magnitudes faster than those larger companies over the last 2-3 years. The reality of the entire AI related stress, what it does to the billing of these companies, and the fact that we are now in a phase where next 2 years the growth is going to be in low single digits only optimistically for most of the companies. The valuation premium of many of the mid-tier companies has compressed, but that some of them still trade at a premium, which might not last longer term because the smaller companies always have a risk of single client disruption, which is absent in the larger companies. So IT industry, like we've discussed, it's a it's a sector in India where you just play it for gains, small gains when the stocks get sold out, but directionally, it's not a long-term story, at least now, at least not for the next 18 to 24 months. I don't see prospects improving significantly. In this time, some companies might reinvent themselves and then might actually become decent investments at cheaper valuations.
Okay, the Zepto IPO and what it would imply really for the other listed QCOM players, that's Swiggy and Eternal, that's something definitely to be debated. There has been a sharp markdown from the peak valuations that Zepto set out to fetch. It's now heading into its IPO with a valuation which is well below its last private round. Remember, it raised funds around almost $7 billion kind of valuation is what it was being quoted at when the fundraising was led by CalPERS. But foreign investors are now indicating interest at roughly a very pre-money valuation of about almost $4.5 billion. So that's a sizable scale down from $7 billion from where it started off. There is, of course, cash burn. There is that weak profitability. There is governance as well as regulatory overhang, which continues for all QCOM players, especially about the quality of the dark stores that they are operating, and that's pretty much across the board. So net really, while they are maintaining a strong top-line growth, orders and advertising revenues are scaling quite fast, and that's colliding now with a market which is not, willing to pay pre-IPO private market multiples or cash multiples that it was earlier dreaming to fetch off, at least when it comes to QCOM models. Sandip, dissect for us as to this kind of valuation downtick that you're already seeing in Zepto. What could it imply for players such as a Zomato or a Swiggy? Because there was that big overhang on these two listed entities about Zepto's valuation.
In many of these unlisted companies, the last couple of rounds of fundraising are typically aimed at public markets. So small amounts are raised to form a valuation benchmark so that the public float can happen at a higher price. Now, those games only have a limited play theme, especially if there is no path to profitability for some of the companies. So I think companies like Zepto have no path to profitability. The only way they go to profits is slow down growth significantly and reduce costs. So the quick commerce, you have to understand, you can grow at any pace. It's such a huge market. If you're willing to discount, if you're willing to sell things cheaper than others, have delivery costs lower than others, you can scale up from, let's say, 1,000 crore company can go to 10,000 crores in very small amount of time. But where are the profits? So I think as if we actually see global bond yields move higher or correction continuing in highly valued tech stocks globally, etc., which we are seeing now, many of these companies which are actually where the valuations are unjustified could actually see further falls.
L&T, that's the other one, which is, of course, going to be the watch point. It's due to report its numbers now. And, it has been bagging some very large-sized orders, the latest one being from the memory giant Micron. But we'll discuss that in just a bit. There is the Adani Energy QIP as well. Let's address that first. And Ashesha is here with the details. Okay, we will get to Ashesha in just a second. But yes, the QIP book opened yesterday and they're looking to raise another round of a good 10,000 odd crore rupees. Having said that, Sandeep, let me get back to L&T. The big overhang, of course, has been their exposure to West Asia and the disruptions which continue to play out. What are you anticipating from L&T's earnings? And more importantly, commentary on the outlook going forward from them.
The longer term outlook is very strong given the kind of capex cycle which is happening in many sectors, not only India but globally. But they do have a sizable exposure to the Middle East, and there could be some disruptions because of that. And that's the reason the stocks actually corrected 10% over the last few weeks. So one concern was the performance of their technology subsidiaries, and those have done reasonably well. The second was obviously these disruptions. But like you rightly said, they have been winning large size orders. So the longer term outlook actually has improved. The short term, we are very unclear on. So I think the management commentary will be very important out there on the extent of disruptions that are playing out and what's happening on the Middle East projects. And that will more than the reported results determine how the stock does in the short term.
Interesting. Okay, that's the take on L&T. But Ashesha is back with us to tell us all about Adani Energy QIP.
Well, yes, so Adani Energy Solutions in focus on the back of their fundraising plans, where the company has informed the exchanges that they are looking to raise a total of 10,000 crore rupees. The base issue, of course, will be of about 3,500 crores, and it will have an option to upsize and increase the fund or the fundraise. Now remember, the issue price has now been fixed at 1615 rupees per share. SEBI's floor price is 1698 and the closing price yesterday was at about 1703 odd levels, implying about 4.9% discount as compared to the floor price and over 5% discount as compared to yesterday's closing price. Let's also talk about the utilization of proceeds then. The company said that will be utilized for capital expenditure, repayment of loans, acquisition funding and other general corporate purposes. Let's also talk about the last fundraise via QIP that the company had done, and this was in August 2024. Back then, the base issue was about 5,900 odd crores, but the company ended up raising about 8,400 to 8,500 crores. The floor price back then was 1,027 and the QIP price stood at 976 rupees per share. So yes, now the company is looking to raise money. 3,500 crore is the base issue. Keep an eye out on this counter on the back of their fundraising plans.
Okay, thank you so much for that, Ashesha. Okay, so that one's in focus as well. So on the power names, Sandeep, JSW Energy, you had Tata Power come out with numbers yesterday. How are you looking at that theme and how are you looking at the numbers?
2-3 years back, many of these utility companies went into deep undervaluation. So I think that was the time to buy them and ride the up move. Now we are into a phase where many of these companies are doing huge capital expenditures. Their return ratios, if you see ROE, ROC, which many people don't look at these days because they just want quick numbers to invest on, are in single digits. So single digit ROE, ROC companies typically should not trade at very high valuations. And plus the kind of capexes they are doing, the free cash flows are not visible for a very, very long period of time. So I would say that the big part of the up move in many of these companies is behind us. And we need to watch out for this sector because utility companies typically will not trade at the kind of price earning ratios which these companies are trading at today.
Sandeep, some of the defensive FMCG HUL numbers are coming out today. What we saw is for other FMCG companies, the volume growth has been good. They've been able to pass on some of the costs across. How do you look at some of the FMCG companies?
Yes, I think consumer company numbers have been strong. So I think the last company which reported, Tata Consumer, also the numbers were strong and outlook was positive. Many of these stocks, except for very few, are actually beaten down. So only some consumer companies like a Nestle or a Marico have done well and are trading more near their all-time highs than many of the other consumer companies which are actually trading more near multi-month or multi-year lows. So if the revival thesis is reaffirmed with the results, etc., we could see some upsides in many of the consumer names.
Well, Manipal Health IPO is going to open today. They're clearly a market leader. They currently are operating India's largest multi-speciality hospitals, clinic, diagnostic centers. Sandeep, given the kind of scarcity premium that the healthcare pool specifically enjoys, and we've seen that time and again play out with your Max, Apollo, and the likes, do you think this would be a good buy?
So again, we come to a distinction between a good company and a good valuation. So Manipal Health obviously is a good company with the kind of presence they have within India and I think if I'm not wrong, they are the largest among all the players. But the valuation at which the IPO is coming at 85 times earnings leaves actually nothing on the table for investors. So then everyone has to take a view on how they want to play it. From my perspective, I think the valuations are not justified.
Sandeep, the other sector which has been little muted is the real estate one, and it's not the numbers have been decent for some of them, but the entire sector has not been taking off. Where do you think is the issue?
So I think there has been some slowdown in the offtake. Many of the real estate companies have turned cautious. If we saw the commentary of the Lodha management also, so they have said that we have sufficient inventory and projects on, and we might not be doing new project announcements in the short term. So I think that's something which is bugging investors, that is there a slowdown happening? Although in terms of cash flow collections, etc., it's strong. So I think it's a mixed bag. The stocks have got sold out, so some stocks could be in the buy zone, but overall the sector seems to be going through a slight flux. But I still believe that if we don't see an interest rate hike cycle, the sector should still hold on.
Okay, so on the smaller IT names, Sandeep, I'm curious to know how you look at them. Coforge came out with numbers, Happiest Minds came out with numbers. I'm not sure if you've had a chance to check those numbers, but how do you look at them?
Again, we discussed these start of the program that many of these companies are giving a positive guidance, but I think the growth prospects due to the AI price as well as volume deflations, which we are going to see, is going to be tough over the next couple of years. So valuations are not cheap. So you just buy these stocks when they get sold out and try to ride them for some returns. But longer term, next couple of years at least, I don't see a directional bull market starting in these companies.
Kunal, what's your opinion though? There have been those sporadic shoot-ups in the likes of a KFintech. Coforge is going to be in focus today after its numbers. What are the charts looking like?
I think KFintech yesterday was a very interesting chart. The stock managed to show good 7-8% plus kind of a recovery for a major part of the day. Volumes were at a multi-day, multi-month high for KFintech. This could probably lead the stock into a breakout of a major barrier around the 1,000 mark. 945 approximately is where the stock closed yesterday. So we could be looking at a potential 5 to 7% upside for the stock in the near term. Typically what happens is after a 10%, 15% kind of a broad up move, the stocks go into a few odd days of choppiness, consolidate at the higher zones. And that's where I think traders could get a second opportunity to go for a buyer and accumulate into these stocks. And you've seen many of the stocks showing signs of such kind of recovery where they've come out after weeks and months of downtrend for themselves. In the first move, the volumes move up higher, and then slowly and steadily the trend starts to shape up. So that I believe could be an interesting play. Coforge, on the other hand, I would sense that the stock is just about consolidating around the long-term moving averages. 1480.85 is where the stock has closed. Maybe if there's a 3 to 5% kind of a downtick, that could throw in a good opportunity to go for a buy.
Well, the one long forgotten space is finally coming back, and the one place which has really been buzzing has been the box office of late. And I think that spree since Dhurandhar hasn't quite died down, and now it's Odyssey. Next, it's going to be Spider-Man as well. And Sandeep, you made that observation. You think time to look at PVR again? Should one have exited earlier?
So PVR is something which we hold, and it's been a stock which has actually underperformed for us. But I think what most people have missed out is the kind of balance sheet improvement they have done over the last 2-3 years, where from a 1400 crore debt, they actually gone to cash surplus. The box office has started to do well. So I think that augur wells for them going forward. And with a combination of asset light and owned cinema models, I think the cash flows will remain strong going forward. And the outlook for movie releases also continues to be very strong. And it's very under-owned. I think among institutional investors, there's hardly any holding. So my view is that it'll come back. It's very cheap, and there could be significant upside over the next 12 to 18 months.
Right. Well, PVR INOX may have started off quiet right now in trade, but those are decent levels, 1100 thereabouts. And Kunal, one has honestly not been tracking this off late or all that very closely. But I think 1100 would be what, the previous peak?
Yeah, so 1200 approximately is the previous peak for PVR, but 1100 is also a very crucial level for the stock because it coincides with the long-term average for the stock, to the breakout point for the stock or the resistance point for the stock price in the previous minor attempts towards a breakout. So I would believe that yesterday's and the day before yesterday's move for PVR, the best part was the move was on the back of some extremely strong volumes. 3 days of chunk of volumes for the stock price, where the volumes were almost 16 to 20 lakhs. Prior to that, the average volume for the stock was a paltry 2 lakh, 3 lakh for the stock price. So that tells you that there's been a huge jump in terms of the delivery data for the stock price. That should be very encouraging for the near-term trends for PVR.
Okay. All right, that's how we're shaping up. Now, Sandeep, very quickly, some of these chemical companies, SRF, Balaji Amines, very, very strong numbers. I was just looking at Balaji Amines' numbers, and it's a 12-quarter high in terms of top line. And the last time they clocked a top line like this, margins were at 21. This time they're at 25. Are we entering a favorable cycle where some of these companies are concerned? And if so, how should one play it?
I normally don't buy chemical stocks because I find it very tough to track specific company chemicals, specific price movements, etc. And the profitability of these companies tends to be extremely cyclical. So I think some of the analysts who can actually track these much more closely on the ground, I think this is a sector more for them.
Well,